So Royal Energy. Royal Energy is a fairly new private independent oil and gas company. We are based in Sydney, Australia. Royal started in 2017 effectively. My background briefly, I was at Anzon Energy, Anzon Australia, which we sold to Rock Oil in 2008. And then I teamed up with Chris Way of Rock. We set up a company called Bridgeport Energy, which is now sold to New Hope. And then 2017 came along and we thought, we've had enough of this. We want to do it all again. So we set up a company called Royal. And our first asset where we acquired was an interest in the Cliffhead oil project, which you may have heard Rob Towner, the operator, and so we bought a 21.25% interest in Cliffhead in 2017. So what is Royal? Royal currently has its interest in Cliffhead. We recently acquired a 1% interest in the Weeks royalty. And the Weeks royalty, which I'll explain after this, is basically a overriding revenue royalty of all Esso and BHP's interests in Bass Strait, oil and gas interest in Bass Strait. And it's quite fortuitous because we are currently fundraising for that. We bought that for $5.8 million. That's currently doing around $800,000 to $900,000 net revenue a year. So we think that's a very good, stable cash flow project for a company of our size. On the plus side, Royal, for a very new and small company, we have cash flow. So out of Cliffhead, we're currently making net around $1 million our share. That's around 800 barrels a day. And if production is up around 1,000 barrels a day, because one of the wells is down, it's more like nearly 2 million net to Royal. So we are a cash flow positive company. We also have a pre-IPO stake in Vintage Energy. That's Reg Nelson and his company that they set up a couple of years ago focusing on East Coast gas. What is the Weeks royalty? So as I mentioned before, that's an overriding royalty over Esso BHP's interests, PEP 38 in Bass Strait. That has been, Esso and BHP have a 50-50 partnership in Bass Strait, which they've done since 1967. It's a tier one group of assets. Currently, the mix between oil and gas is about 70-30 to oil, but over the next couple of years, that is trending towards 50-50 oil and gas, which is very opportune given the rebalancing of the gas price in East Coast Australia. This graph just shows basically the oil price from early 2016 when it went down to the sort of the low 30s, and it's back up to 70, and also a rebalancing of the gas price. It used to be down around $3 to $4 a gig, and now it's up to the $8 to $10 a gig. And as a lot of the contracted gas becomes uncontracted the next couple of years, that repricing, there's no doubt it's going to be up around the 8 to 10. I think that's a pretty commonly felt view. And this royalty obviously will take advantage of that and provide a very stable long-term cash flow for the company over the next 15 years. Cliffhead, you may have heard the presentation yesterday. As I said, we have a 21.25% interest in Cliffhead. Our interest is a very strategic interest because whilst we only own 21.25%, we own half the actual operating company which operates the Cliffhead project. It's located 10 k's offshore WA. It's produced 15 million barrels since 2006. Currently, it's producing steady state around 800 barrels a day. Normalised, it's around 1,000 because one of the wells is down, and there's a workover happening in September. That'll bring it back to 1,000. Our share's around 200 barrels a day out of Cliffhead. Cliffhead has around 3,500 2P reserves, our share around 750,000 barrels. Obviously, there's a lot of sort of production optimisation work currently underway by the operator. Well workovers, I've mentioned CH13 is being worked over in September. That'll bring on another 250 odd barrels. There's a lot of enhanced oil recovery work going on. The operator has also recently completed a static model, reservoir modelling, etc. And our internal numbers are around 10 million barrels of 2C resources. So that is, real upside in a project that has been going for the last 10 to 15 years. Another very important and strategic piece of the Cliffhead puzzle is the fact that we have an interest in the Arrowsmith crude stabilisation plant. It is an underutilised asset now. It has the capacity to take in 15,000 barrels a day. Currently, it's only doing around 1,000. I think the view is, if and when Xanadu, as you know, Xanadu was a discovery well in 2017. They're now doing seismic on that in the next month or so. Hopefully, that will come online, and they will need to come through our processing plant. That will add not only revenue to us, but it'll also extend the life of the Cliffhead project, because our operating costs will come down. So, why invest in Royal Energy? We believe Royal is very undervalued compared to its listed peers, and for a small company, we value ourselves in the range of 8 to 10 million, based on the various public multiples. If we're around 200 barrels a day and we've got around 800,000 barrels, based on the current multiples of our trading partners, that values is around 8 to 10 million. Our team, I know it's a fairly generic comment in a lot of these presentations about, one has an excellent management team. I'd just like to run through very quickly. You may know Bruce Gordon, who is an ex-BDO audit partner. He was head of resources at BDO and PKF. Michael Arnett, you may know, he was also a former resources partner at Deakins and Norton Rose. He now heads up Tamarind, and he was on the board with me at Anzon and Bridgeport now. Royal, Chris Way, who I mentioned before, we founded the company together. We founded Bridgeport together. He still runs Bridgeport. And Gordon Ramsay, not the chef, but Gordon is he's ex-UBS, and he was a director at FAR, and he's a very valuable member of the board. So it is we have a very lean team, but with really a strong record of success in building small companies. So the value proposition, as I've said, currently, because we're doing around 1 million to 2 million, depending on production. If we finalise the acquisition of the royalty, that'll add another 800 to 1 million to our bottom line. We have strategic exposure to Cliffhead. We have a very wide ownership base. No single shareholder owns more than 17% of the company. We have very low overheads, and we really are sort of within the next 12 months, I would expect that we're preparing for a liquidity event, whether that's an IPO or a backdoor. Our shareholders have been with us for a few years, so it's always in the back of my mind that they're very loyal and sophisticated shareholders, but liquidity event is coming up, and hence there's a certain premium upon a listing, we believe. So here's some basic deal metrics about the company. If you sort of work backwards, we've got 34.5 million shares on issue. And if we said the company's worth 8 to 10 million based on those previous multiples, if we're looking to raise 6.5 million for this royalty, we believe there's a good uplift of up to 40 or up to 80%, 77% with an IPO. So currently Royal also we have around over 2 million of cash or available cash. So we're not raising money to survive, we're raising money for the next acquisition. That's just a quick summary of the cash flows from the Reeks royalty, which estimated cash flows, which is a risk report. Basically, as I said, it's doing around $900,000 today. That declines, obviously, but over the next 15 years. So it's a very stable cash flow producing asset for us. So that's Royal Energy in a nutshell. We're a private company, and if you want to know more about us, please come and see me after. Thank you.